please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
First, let's get to the top story this evening. As expected, the Monetary Policy Committee has left key policy rates unchanged. But with warnings on inflation, crude oil prices and fiscal deficit, the RBI made it very clear that it does have its finger on the trigger for a future rate cut. That's very, very important, and the markets took some heart from that. First up, here is how the Monetary Policy Committee voted. Governor Patel and Deputy Governor Veeralacharya voted for a status quo. But Executive Director at RBI, Michael Patra, voted for a 25 basis point hike in the repo rate. All the three independent members of the committee also voted for a status quo. So, just one member of the MPC was in favour of a rate hike. In the press conference, Governor Patel underlined the risks of inflation, especially from crude oil prices, and raised the near-term and medium-term forecast for inflation. The RBI also cut its GDP forecast for this year, but maintained its 7.2% growth forecast for FY19. However, Governor made it very clear that recovery is at a nascent stage and it must be nurtured. The Governor took the new fiscal deficit targets in his stride. However, he also warned against any further deviation.
The nascent recovery needs to be carefully nurtured and growth put on a sustainably higher path through conducive and stable macro-financial management. Against this backdrop, the MPC emphasized the need for vigilance and decided to keep the policy rate on hold with a neutral stance while reiterating our commitment to the target on a durable basis. Looking ahead, the MPC noted several upside risks to the inflation trajectory. The firming up of international crude oil prices, the hardening of non-oil industrial raw material prices, and stronger pricing power among firms. While inflation will likely move in the range of 5.1 to 5.6% in the first half of the next fiscal year, i.e. 2018-19, favorable base effects, including unwinding of the 7th Central Pay Commission's HRA impact, combined with expectations of normal monsoon and effective food supply management, may see inflation easing to 4.5 to 4.6% in the second half, with risks tilted to the upside. Even as the fiscal deficit has stayed above 3%, inflation has come down to some extent because the fiscal stance starting from 2014 has actually been on a downward trajectory. Secondly, the monetary policy itself has become much more flexible in terms of responding to the inflation risks. So it is not necessary that that 3% target should be achievable by the time that the report said. The report was written in 2014. However, having a fiscal stance that is conducive to achieving the 4% target is important, and significant and postponed deviations from them would make matters more challenging going forward.
All right, we will get Lata back to help us understand the key areas that we need to focus on. But for now, let's shift our focus to the trading action of the day. The Lal Street failed to mirror the overnight rally on Wall Street, with the RBI policy dampening sentiments further. The Nifty opened above 10,600 and saw selling pressure from the first tick itself. So the index saw a steep slide in the last hour of trade and closed with a 20-point cut, as you can see on your screens. The Sensex also opened above the 34,300 mark, but then ended more than 110 points in the red. Bank Nifty was under pressure and was a very clear underperformer, which has been the case for the last couple of trading sessions. Now, a status quo policy saw selling pressure on the index, which ended with cuts of about 0.5%. Mid-caps, however, bucked the trend, slightly better than the blue chips, that is. The index closed with gains of about 0.2%. We will have to take a very, very short break on that note, but lots of stories lined up on the other side, especially the big story from the Supreme Court. The Supreme Court has cancelled all iron ore mining leases in Goa and no operations after the 15th of March. Slams the state for its inability to stop violation. Stay tuned for that story. Welcome back. You're still watching After the Bell on CNBC TV18. Now let's get you the big story from Supreme Court. In a big legal setback for miners in Goa, the Apex Court has cancelled 88 leases that were renewed in 2015. The licenses were renewed by the state government just before the Mines and Minerals Act mandated the auction of these mining leases. This basically means that all mining activity in the state will come to a standstill on the 16th of March. The top court did not only cancel the lease renewals, it also came down heavily on the miners and the state government. Ashwin Kumar, who was in the court today, is here with this important story. Ashwin, exactly what was the rationale of the court order and what does this mean for companies now?
Well, clearly, as you pointed out, as far as companies are concerned, they are looking at somewhat of a stalemate as far as March 16th is concerned. That's the time they have to wind up operations as far as these 88 mining lease renewals are concerned. Now, mind you, as you correctly pointed out, these renewals were granted just days before the MMDR Act was in fact brought about, and that was the story. Not the only concern. There were a number of other concerns that were highlighted by way of a petition by the NGO, which raised questions with respect to environmental clearances, with respect to over-mining, with respect to wildlife clearances. And on the back of all of these, the Apex Court came down very harshly. The language that has been used is that there has been a blind pursuit of money, that the state has been unable to stem such illegal activities, that the responsibility must rest with the state, and that it's time and that there be more sustainable means of mining, and that such efforts be shown the door. On the back of that, the Apex Court giving a two-part order that as far as 88 mining lease renewals were concerned that were granted in 2015, they have all been quashed now. That's part one. The second is only days now being given to the miners. They have time till March 15 to wind up operations in these mines. As for the companies that stand to get affected, well, the only listed player that is likely to get affected will be Vedanta, who have exposure to the mines, iron ore mines in the state of Goa. Back to you.
Oh yes, the big player that will get impacted is evidently Vedanta. We try to get their assessment as well, but for now, thanks Ashmit for joining in and giving us that explanation as well. But for now, thanks Ashmit for joining in and giving us that explanation. Let's drive over to our special coverage of India's biggest auto event, the Auto Expo 2018, which has kicked off starting today. The event that will last till the 14th of February has begun with a slew of launches and unveiling of some concept motor vehicles. Rohit Paratkar takes us through some of these launches. Take a look.
This is the Maruti Suzuki Future S concept. It's a concept that envisions a compact crossover-ish vehicle that will sit between the likes of the Kwid and the KUV 100. It has compact dimensions. Maruti Suzuki is known to make really great compact cars. This, however, is a concept that will take production shape in a couple of years from now. It is really compact but has some really funky designs that will set it apart. There's a little bit of a KUV inspiration in there, not just the color, but even if you look at the headlamps, they're inspired from sports goggles. They have one seamless frame where the headlamps are integrated. You see a similar design at the back as well with the tail lamps. You have this really nice upright A-pillar design which nicely gels into the doors. And again, you have a two-door look. However, it is a four-door. You have two door handles on the side. But I think by the time this car reaches production, it will not have a suicide door on the rear. It will have something for more conventional door with a different looking C-pillar mounted door handle, something like what we've seen on the new Maruti Suzuki Swift. Maruti Suzuki hasn't really put any timelines on this particular vehicle, but like I said, it will be a compact crossover-ish vehicle that will sit between the likes of the Kwid and the KUV 100. It is much, much smaller than something like a Brezza or an EcoSport. And in that sense, I think it has all the ingredients to make it another successful product. Maruti doesn't have a product like this in its pipeline, in its portfolio, but now it has one in its pipeline. The Kwid has already shown us that there is a need and there is a market for a product like this. And the Future S should take shape as another successful product from Maruti Suzuki. What you see behind me is the all-new Honda Amaze. Now, you generally see that when there is a generation change, the car tends to grow a little bigger. But this particular segment, the sub 4 meter segment, car manufacturers are trying to get every inch possible in that space and try to pack in as much space, as many features, as many new technologies as possible. This particular car gets an all-new platform. It's a second-generation platform, as what Honda calls it. There's no internal code name that they would like to share. They aren't even talking anything about any other vehicles that are possible on this platform. But at some point of time, I believe there will be a hatchback and a crossover that will come on this platform as well. But the car at hand, the all-new Amaze, wears a completely new design. It's inspired by the Civic. We've already shown you that car. It debuted a few years back, and this design sort of is inspired from that. If you look at the nose, if you look at the arrangement of the headlights, if you look at the shape of the taillights, it's all inspired from the Civic. I think it's a little bit of a polarizing design in that sense, but it looks good to me. It's got a nice edgy edge to it, if I may say so. The earlier Amaze, if you remember, was a little more organic in its shapes. It was a little more curvaceous. This one has those chiseled lines, and I think that looks good. Like I said, sub 4 meter or that 4 meter space is very important, and looks like Honda has utilized this design to make as much use of their available space as possible. And that is why if you look at the engine bay, it's quite boxy. It's not very sloping like you would see on a regular sedan in this particular category. And that boxy design actually allows them to make it a smaller engine bay, and that should liberate more space inside the cabin. In fact, speaking of the cabin, let's take a look at the inside as well. I think the cabin looks a little more premium as compared to the outgoing car. In fact, even the dash, the in-dash audio unit or the infotainment system, all of it has quite good premium touches. Clearly, the game has moved on with the kind of cars that have entered this segment, and the Amaze now looks poised to take on all of those. The launch will happen in the upcoming financial year, that is between 2018 to 2019. Honda has confirmed that, and I think that will be one of their first launches in the 6 cars that they've said they will bring in the next 3 years. The segment is booming, of course. The new Desire has been making a lot of waves, has been selling in big numbers, and the Amaze will want to have a big slice of that pie, and the new model clearly looks poised to do that.
Okay, those were all the big launches on day 1 of Auto Expo. We will get you more in terms of interviews and all the big voices as well over the next few hours. But for now, we'll take a very, very short break. On the other side, we will get you the highlights from Prime Minister Narendra Modi's scathing attack at the opposition, and we'll show you how Congress President Rahul Gandhi has hit back at the Prime Minister. You don't want to miss that. Stay tuned. Welcome back. Let's get you an exclusive story. In keeping with Tata Sons chief N. Chandrasekaran's blueprint for rationalizing the portfolio of group companies, we learn the conglomerate is moving ahead with plans to restructure its defence business spread across various group firms. This could see a coming together of the Tata Group's defence interests under one group company, and this is something that has been on the anvil for the company. Nisha Podar is here with exclusive details. Nisha, what exactly is the reject plans and what is the fine print of this?
This could be one of the first restructuring plans by Tata Sons under the leadership of N. Chandra for a more cleaner and organized Tata conglomerate. Now, what we do gather from sources with direct knowledge is that the defense restructuring for one powerhouse of all the defense businesses under Tata Sons is soon to be announced, likely this month. Under this particular plan, 3 group entities, Tata Motors, Tata Power, as well as Tata Industries, would be selling their defense assets to Tata Advanced Systems, which will be the umbrella company for all defense manufacturing under Tata Sons. Now, for Tata Motors, there is TAL manufacturing, which is into aerostructures. That, along with a part of the specialized vehicle business for defense purposes, could be sold for about 800-odd crore rupees. Tata Motors likely to retain a large part of that vehicle manufacturing business and still continue in that defense space in some form. Tata Power's SED, or Strategic Engineering Division, could be sold for about 1,000-odd crore rupees, and Tata Industries' Tata Advanced Materials, which is into armor products, would be sold for close to about 1,000-odd crore rupees. So total intra-group transfer and transactions would be close to around 2,800-odd crore rupees, which would create one hub and one powerhouse for all the defense businesses of Tata Sons under Tata Advanced Systems.
Okay, that is an important bit that we'll be watching for very closely, Nisha. Thanks for that. But we will have to shift focus to the world of politics as the Prime Minister himself is addressing the Rajya Sabha. Let's cut across live.
उस एमपी ने घर जाकर के माला पहन ली, बात पूरी हो गई। ये कल्चर से देश का बहुत नुकसान हुआ है। और आप हैरान होंगे जी, मैंने एक प्रगति टेक्नोलॉजी का उपयोग करते हुए इनिशिएटिव लिया और मैं खुद सारे रुके पड़े प्रोजेक्ट का रिव्यू करने लगा। सभी राज्यों के चीफ सेक्रेटरीज होते हैं ऑनलाइन, भारत सरकार के सभी सचिव होते हैं और मैं ऑनलाइन सबके साथ बैठता हूं। आप हैरान होंगे जी, ऐसे ऐसे प्रोजेक्ट सामने आए हैं जो 30 साल 40 साल पहले तय हुए, शिलान्यास हो गया, बाद में कागज पर उसकी लकीर भी नहीं खींची गई। ऐसे अब मैं एक एक को रिव्यू करना लगा, सब डिपार्टमेंट को इकट्ठा। मैंने ये नहीं कहा भाई पुरानी सरकार था मेरी क्या जिम्मेवारी, जी नहीं। आखिरकार ये देश है कंटिन्यूटी। सरकारें आए जाएं, आप बैठे, कोई बैठे, दूसरा बैठे, तीसरा बैठे, हम कोई इसको तो रोक नहीं सकते, लोकतंत्र है। लेकिन सरकार में ये भाव से नहीं चलता भाई ये तो जयराम रमेश के समय हुआ था, नहीं मारो ताला, ऐसा नहीं होता है। हमने खोजा, आप हैरान हो गए, 9 लाख।
Well, that's actually the second time today that the Prime Minister has given a reply in the Rajya Sabha. Right now, he is talking about development and how online and digital is going to change the game. We will get you more excerpts as and when something important develops from the Rajya Sabha. But for now, completely out of time on this edition of After the Bell. Thanks for staying with us. But stay tuned to CNBC TV18. All the market action is lined up on the other side of this very short break. As Markets Today Talk Back will take the action forward.